what we are trying to do is we're trying to treat people incredibly well. We're trying to be thoughtful and kind towards them. And hopefully that ripples down into their life and how they treat their employees. And we're trying to create a culture that actually cares. Like, people can tell if you're treating people as quote unquote human resources, right? Which is the most sanitized, disinfected term, right? Mm-hmm. Like, people are humans, not human resources. They are the end, not the means. If you treat people as the means to your end, they're going to feel like a tool. They're going to feel like a hammer or a wrench, right? Doesn't feel good. It's dehumanizing. And I think that's what, if you look at a lot of what's wrong with business, and I could go on, you're getting me like ranty now, but if you look at what's wrong with most businesses is they don't treat people as people.
True.
And people can tell. And so what we actually try to do now, imperfectly, we say sorry all the time. Like, we are not perfect. We are very messy. And I say that in the book. Like, I'm the chief amongst messy people. But we have an empathy and a true care for people. Like, we want people to be successful, independent of the business, independent of the financial success, because also it adds to that too. Like, if you can create a system where everyone wins, that's the only thing that's sustainable. Anybody who's part of a system that's not sustainable will stop. Mm-hmm. So if any one of the stakeholders is in a position where it's not long-term sustainable, you're screwed and you just don't know it yet, which is what I feel like a lot of people miss.
Welcome to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest topic of all, money. How to make it, save it, keep it. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. My guests share their practices, principles, and evergreen wisdom. I'm your host, Bogumil Baranowski, author, TEDx speaker, and investment advisor to wealth creators with patient capital and an infinite investment horizon. I work with families and individuals who aspire to grow wealth over a lifetime and generations through disciplined, thoughtful investments in durable, quality businesses, while giving money meaning. Join me on this quest to unearth and share the wisdom of the ages. Let me share with you the podcast program disclosure statement. Blue Infinitas Capital LLC is a registered investment advisor, and the opinions expressed by the firm's employees and podcast guests on the show are their own and do not reflect the opinions of Blue Infinitas Capital. All the statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. The information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. The information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. None of what you're about to hear is investment advice. My guest today is Brent Beshore. He's the founder and CEO of Permanent Equity, a private equity firm that uses 30-year funds to invest in and partner with companies that care what happens next. He's the author of a wonderful book, The Messy Marketplace: Selling Your Business in a World of Imperfect Buyers. Brent, how are you? So nice to see you.
Hey, I'm doing great. Thanks for having me on.
Well, I've been looking forward to this. I mentioned to you that I had Ted Sadie's on the show, and we talked about you. He profiled you in his book, and you were a guest on his show. And I was looking forward to having this conversation and asking you some questions directly and learning more about what you do. So we both invest, and we both see investing as ownership of businesses. I'm on the public side, but I'm very intrigued by the private side. I feel like both can learn from each other. And then you work with sellers who are families very often, and I get to meet those families at a different stage of their life. Usually when they have excess capital outside of the original business that can be invested in a stock portfolio, or once they sell the original business and they wonder what to do next. So our worlds overlap in a peculiar way, and I find it very intriguing. I want to ask you about the book, I want to ask you about the work, but I'd like to start those conversations about the early days, if you allow me. And I ask my guests about their childhood, upbringing, and how do you think that time shaped you, your relationship with money, and the career path that you chose.
Yeah, I grew up in Joplin, Missouri, which is the southwest corner of the state. It's near the Oklahoma, Kansas, Arkansas border. My dad worked for the same company for 39 years, and my mom was a college professor. And I have one brother and small family. Yeah, in terms of money, I mean, I think that I thought at a young age, and part of this is like you don't know where these ideas come from, right? But I definitely got into my head that money was freedom, and money was authority, and money was going to be the ticket to do what I wanted to do in life. And I think if I go a level deeper, I think we all want to matter and belong, right, at sort of a base level. And I looked at money for a long time as being a primary pathway to matter and belong. So. Yeah, it definitely got complicated, especially once you start in your 20s trying to make money and getting out there and colliding with the real world.
I want to ask you about investing. How did you discover investing? And when I said investing, when I was writing down the question, I was thinking, should I ask about business ownership? Because it feels like what you do is really business ownership. So how did you discover that area?
Yeah, well, I was not one of these people that grew up reading, Berkshire letters and fantasized about being an investor. In fact, when I graduated from college, I had no idea what I wanted to do. I went to school in Virginia, a small school in Virginia called Washington and Lee, and I was a politics major with an emphasis in poverty studies. So I had really took very few business classes. And went and got into a JD MBA program at Mizzou. And so I had no idea, again, what I wanted to do. And so that was kind of if you don't know what you want to do, those will give you options. And ended up dropping out of that program a couple of years in to start a business, and was an operator of that business. One thing led to another, started a few other things, and then accidentally bought a business, or as close to accidentally as you could. And it was only after I bought that business and did real well with it that I started making, what I call like real money in my late 20s. And dumb as it sounds, I remember when I was sitting there and I was like, okay, I paid back the SBA loan that I took out. I've got more money than I thought I would have, and I should try to figure out what to do with it. And so that's what led me to starting to read about other investors. And like, as baseline a question as this is, what do you do with money to make more money? And so I started reading, Howard Marks letters. I read the Berkshire letters. I, read about Malone, and I mean, just all the sort of the investing greats. When you Google, best investors in history, it's like, take the top 20 and start looking at how did they do what they did, and like, how do they think about it? And so it was really self-education. I had no mentors or anybody. I had no friends who were investors. I live in, and still do, in Columbia, Missouri. And so it is not a hotbed for the finance industry, let's put it that way. So it was really only after I had started making money that I turned my attention to what to do with it.
Do you think it helped you that you were an outsider? I kind of appreciate that, and I meet a lot of people, guests on this podcast, that had no prior exposure to actual financial services, investment firms, or anything alike, and then they find their way into the field from outside, and they have a whole different perspective than anybody else could.
Yeah, I mean, I think it helps in some ways and hurts in others. I mean, there was, I had no preconceived notions of how to build a firm. I had no preconceived notions of what to do with my money, and I didn't take anything for granted. I think those are probably the upsides. The downsides are, I mean, there was a lot of things that I just would have known or should have known if I had been around anybody else who's an investor for very long, that I had to kind of like recreate the wheel. And, you get to know people and you're like, have you ever faced this issue? And they're like, yeah, of course, this is exactly how you solve it. And you're like, oh, well, that would have been helpful 2 years ago. So, I mean, I think, look, I would say it creates a wider dispersion of outcomes, not coming out of, and sort of with the upside of having been educated by somebody else in its more traditional financial firm. It comes with the downside of not knowing basics, and then it comes with the upside of probably, I wouldn't design the firm. We have I used to call it unusual structure. I think it's now technically unique. And there's no way I would have even thought to ask for it had I been, in a traditional finance firm. So, there's definitely upsides and downsides.
Well, speaking of unique and unusual, I want to ask you about your approach to buying and owning privately held businesses. And there's a quote in your book, The Messy Marketplace: "Great business outlasts individual careers, including those of owners and founders." And I think it's a huge revelation. All the founders think they'll be around forever. And there's a moment when, even if they will obviously, live forever longer, there's a time to step away. And can you talk about this unique way of finding businesses, and maybe introduce us and the audience to how you go about it? Because a lot of private equity operates in a completely different way than your firm does.
Yeah, we have an unusual method of how we find opportunities, and it really comes from our lack of background in the industry. So I came out of the marketing ad agency world, and that was kind of the first series of companies that I owned. And the thing that we did for clients and that we got pretty decent at was putting things out there that would attract, so it's called inbound marketing, would attract people, inbound to the firm. And so when we decided that this was the area that we really wanted to go after, we said, well, why would we not just do the thing that we've seen work for other businesses? And we didn't know that wasn't a thing in private equity, right? At the time, this is called 2012, 13, 14. Really no one, financial Twitter wasn't really a thing, especially the S&B Twitter wasn't a thing. There was very little information being put out there. No private equity firms basically had like a blog or anything. And so we just didn't know any other way to do it. We didn't have the skills that traditional private equity had, to be honest. And so since we didn't know what we were doing, we just did the thing that we did know how to do. Mm-hmm. And so we started putting things out into the world that were who we were. We would talk about ideas. We would talk about how we were doing things, how we were thinking about things. And what it inevitably did, which was intentional, was to attract the right people and repel the wrong people. And so, I think every employee that's come on board, every investor that's invested with us, every business that we've bought has somehow come from one of those things we put out into the world that came inbound. We were not going outbound and knocking on people's doors and saying, hey, do you want to sell your business? The power dynamics are all off. We can talk about why that is. The chance of finding somebody at the right time. In order for somebody to sell their business, it's usually a 5 to 10 year process, or there has been a significant life event that is forcing that timeline. Mm-hmm. So death, divorce, change in health status, change in responsibilities, psychological issues, burnout, whatever that might be. And so usually there's something that's a catalyst for really moving forward with that. Most business owners, this is their life. This is the thing they know, and they employ their friends, they employ their family, they are anchors of the community. And so it's a huge deal for them to think about even giving up that control and in some ways losing identity. So we, to make it sort of short and sweet, we say things in the world. We go on podcasts. We write things. We do some video work. We, basically just to try to tell people who we are and let people select in.
And I want to highlight a couple of things. You buy to ideally never sell. You don't use leverage. And it sounds like you have none of the aggressive traditional private equity tools that require them to show improvement very quickly because they have a much shorter window than you do. Am I onto something?
Yeah, we're really big weirdos, like really, really big weirdos. So we, in many ways, we're the opposite of traditional private equity. In fact, I remember our last fundraise we did in 2019. And I remember one of the LPs that we were talking with said, "Now, let me get this straight. You're telling me that the opposite of traditional private equity is going to yield me better results than private equity?" And I was like, "Yeah, that is exactly what I'm saying." And I think that, by the way, I think traditional private equity works. It's just not I couldn't do it. I don't have the skills to do it. I would be stressed out, and it would not be the incentives that I would want for my life and for the people around me. I don't think that I don't think it sets the table well for a fruitful, flourishing, long-term relationship. And I think that's not meant to. I think that, traditional private equity is the buy, lever, strip, and flip model, right? You're going to try to buy it, put as much debt on it as you possibly can tolerate. And some people, look, there's a lot of good people in traditional private equity that do this with responsibility. But anytime you add transaction debt, especially to an organization, it doesn't help all the stakeholders. It only helps the buyer and the seller. And so, every other stakeholder necessarily suffers as a result of that. And it forces your hand. Like, you have cash flows now that are beholden to a bank. You lose flexibility in how you can operate. You lose flexibility in timeline. All the incentives are to set the thing up to pay down some debt while you own it, increase the earnings, or at least the appearance of earnings long term, and then to resell it to somebody, hopefully within a pretty short period of time. Most private equity, if you ask them, what would be an ideal outcome, they'd probably own the business for no more than 3 years, which, depending on who you are, may sound like a long time. When you're trying to change the trajectory of an organization and you're trying to, really do something, 3 years is nothing. And it's beholden to a lot of wins, whether it's overall economic wins, wins within the industry. And sometimes you can get tailwinds, and sometimes you get headwinds and crosswinds and everything in between. So, our approach is we buy with no intention of selling the business. We've never sold anything to date. Doesn't mean we might not sell. We can talk about why we would sell and why we wouldn't sell. We think there's good reasons to sell and bad reasons to sell, but we never want to be a forced actor. So we never want to be forced to buy something. We never want to be forced to sell. So we have a 10-year investment period for each fund, which gives us the flexibility to not have to do anything for a long period of time. And then we have a 30-year initial term on our capital, so we don't have to sell within any reasonable period of time. So we don't use debt in our transactions. We will use some debt post-close, potentially to finance inventory or rapid growth of the business. But that's very different than putting on deal debt and sort of sucking out the equity structure. So we're like I said, we're pretty weird in almost every way.
But that's the good part. You pointed out so many interesting things. I think the time horizon for a lot of people these days, both in public and private markets, is way too short to see the actual change. I like the idea of an infinite investment horizon. The families that I work with, that I manage money for, they really have an open-ended investment horizon. They can really wait. And I realize how few people can, and the setup that you have allows you to wait. And the change just takes time. I was wondering, when I was reading your book, what would be a dream business to own for you, given the context that you just set up here?
Yeah, I feel like we fortunately do own some dream businesses. We've been at this for quite a while now. And, it seems like once in a lifetime opportunities come along every 2 to 3 years. Is approximately kind of what it feels like. We've owned the first business we ever bought. We bought it back in very early 2010. Still owned today. It's a military recruitment firm. We have a great relationship with the CEO. Long time. She's been there since the very beginning, and worked with her for, pushing 15 years now. It's crazy. I never would have imagined. Still own it. It's doing great. It's about little over double the size of when we bought it 15 years ago, and has been going strong ever since. It is a civilian branch of the military that we resupply all the ships that never come into port. That's one of our big contracts for the Navy. And in terms of dream business, it's asset light. We love the thing that we do. We feel like it's a great service to the community and to society to help the military be able to resupply ships. And we like the team. It does real well. I think those are the types of businesses we want to own. We bought a children's clothing brand and partnered with a family out in Southern California last year. It's been fantastic. Very unusual business model. Even though graveyards are filled with investors who thought they could get into fashion and do well in it, I think that we're we've been appropriately skeptical of the business model. And then you find things that come along that look very different. And they're example of one. We own we think the nation's largest backyard fence builder. So in Dallas, Texas, that just is amazing. They're putting up a huge percentage of the residential fences in the Dallas region. Their market share is absurd, and we love that business. I mean, we have 16 portfolio companies at this point, so it's kind of like asking what's your favorite child. But I would say when we think about a business, what is our ideal business? It's a business that they're excellent at the thing they do. Mm-hmm. It's in an industry that's not going to likely go through rapid change. Of course, the future is unknown and unknowable, but I think you can predict. I mean, look, fences have been around for a while. I think that fences will be around for a while. I don't see fences not being something that's necessary in neighborhoods, at least as we conceive them now, for quite a while. So maybe in 100 years, there's something that has replaced the fence, or we're organizing our society differently. But right now, it looks like fences are going to be around. We own a big swimming pool builder. People have been dipping their bodies in water for pleasure for thousands and thousands of years. I'm not sure that's going to change with AI. So it's, things like that we try to get into that are, predictable. They're of a size where there's a heft to the business. They're excellent at the thing they do. There's also room to grow. So ideally for us, we're finding a highly successful smaller business, smaller being kind of $3 to $20 million of free cash flow. I'd say ideally for us, it's probably in that $5 to $15 million of free cash flow range. And with lots of room to grow and improve. And, I've never seen a smaller company that's good at everything. So what we'd like to do is, if we select well, the industry's great, the business model's great. There's probably room for improvement on the, we call business of business, the everything tastes like chicken layer, that it doesn't matter if you're doing military recruitment or pool building or fence building or, whatever it might be. Everyone's got to have the same basic find customers, execute, back-end accounting, finance, technology stacks, things like that, which we think that we try. I think with our businesses, we try to get into helping them in areas that are low frequency and high value. Mm-hmm. And so we have a group of people. There's about 20 of us at the permanent equity level that actively work with the companies, and we enjoy it. We love it. I think I have the best job in the world.
I can tell. What you mentioned so many things, and the change, predicting the future, that's a big part of it, especially these days when we talk about so many businesses being subject to so much change. And the other thing that spoke to me throughout your book, it was hinted, and I think I picked up on it correctly, was a loyal customer base, which is something that I also look at on the public market side. And it's not that visible or obvious, and it can be expressed in different ways. But it's really helpful to know that people will show up regularly, whether it's tomorrow because it's coffee or in a year because it's a phone upgrade, but to know that there's a loyal customer base that somehow has this tie to the brand, to the service, to the good, to the business, and they'll keep coming back, because that's the only thing that gives me some peace of mind that I have a repeatable business, not a one-time hit. Funny that you mentioned fashion. I don't want to explore it too much, but
yeah,
but that's an area that sometimes looks great, and then sometimes surprises us how tough it is to impress and bring the customer back.
For sure. Well, I think that, so we use a couple proxies for customer quality. One is the margins that the business enjoys, and then two is the time to pay. So if you think about, if the business has high margins and is paid quickly, they're really important to the customer. Very, very important. So like as in our clothing business, margins are very good, higher than average for the industry by a lot. And our customers pre-buy virtually all of their inventory. So there's no capital at risk. There's no inventory. There's no working capital escalation as the business grows, because our customers are buying drops and they're saying, okay, hey, our summer collection's coming out in March. If you'd like to buy it, you can buy it. And if not, there's nothing left. It's not like we hold inventory. So it's all drops driven. And so when you look at from a business model perspective, we looked at dozens and dozens of very successful fashion brands that we had seen through the years, and all of them we pretty much said no. We saw this one and we said, wait a minute, this is very different. If we stripped away fashion as being the thing that it actually did. And there's some other nuances. They're actually not super trend driven. They're more classics driven. And so you strip away all of the what is this thing and just looked at the income statement, the balance sheet, the cash flow statement, and said this is a incredible asset-like compounder growing at a very high rate in a huge market with obvious quality and obviously a very loyal customer base. It would look like one of the dream investments. And then when you layer on the fashion, it almost fogs it up for you, which is why I think that we were able to partner with them, because I think a lot of people would, whether it's construction or fashion or fill in the blank, whatever people are predisposed against, there's a laziness, I think, amongst some people who look at these businesses and they just say, it's in construction, can't be good. And by the way, that heuristic works 99% of the time. The problem is you're looking for the 1%. Like that's where the real value in finding these businesses is, and sorting the signal from the noise, and that it's mostly noise. Most of these businesses either shouldn't be sold or are just really crappy commodity businesses.
It makes me think that no two businesses are alike, and we use so many labels in the investment profession: value, growth, tech, industrials, chemicals. And you actually have to look at the business. What is it that they do? Who else does it? How does the customer feel about what they do? If they disappeared tomorrow, would it be a problem for a lot of people? And all those questions that are much more important than trying to label the business and understanding what it actually does.
Amen.
Right? I want to ask you about the sellers. Why do owners sell? And you write about it quite a bit in the book, and I wrote it down for myself that some might find it surprising that it's not about the money. And you share, it's financially speaking, owning the business, staying with the business would be better than selling the business. So the reason to sell, which I think is a surprise to many, is not really the money. There are other reasons why people sell. Can you go through some of the most common reasons why people end up selling the business?
Yeah, I think that is the common misconception, is that the reason why you sell is because you want to get paid. We will never buy a business from somebody who's not already rich, because if they didn't get rich doing it, we're sure as heck not going to. Right? Just those simple heuristics, when you think about it, it totally makes sense. But if you have a seller who's looking to get paid by the sale, they're doing something wrong. So most of the businesses, all the businesses that we're buying, and most of the business I would say that are for sale out there, are from people who are making really good money. And the multiples in our area of the market are low enough that it's always going to be more advantageous to lever your time against your money, right? Lever your talents against the resources you have. So why can you generate a better return owning a small business than investing in the stock market? Well, because you're levering your time and your talents and your relationships against your money. I mean, that's the whole point of what you're trying to do when you own a small business. So by definition, if I'm going to say, okay, I'm going to remove your ability to invest your relationships and invest your time and your talents, I'm going to pull that out. In exchange, I'm going to give you a check. That check, especially post-tax, is never going to amount over a 10 or 15 or 20-year period to what you would have gotten had you stayed in the business and worked at it. Now, the big caveat is time. Do you want to spend your time, and do you want the emotional investment to run a business? Most investors have never run a company, let alone a small business. I equate it to a knife fight where you get out of bed, try not to get stabbed, and get back into bed and try to do all over again, right? I mean, it is brutally difficult. The number of things, I could regale you with story after story of, how haywire things can get. I mean, across 16 companies every week, our Slack channel is filled with mishaps and mistakes and terrible behavior and just weird stuff that happens that you never would guess, right? And it takes an emotional toll. It's really hard. If you look at most small business owners, and when I say small, these are not like the bagel shop, right? I mean, that is a small business. But what I'm talking about is these are legit. These are the people who own these businesses are the icons of the community. These are the chairmen of the country club. These are the people who they have a lot of resources, a lot of employees. These are not small in maybe what people would think of. I mean, these are $5, $10, $15 million free cash flow businesses owned by a family and potentially even just one person. So these are highly successful organizations. They are just absolutely brutal to operate. And so when you layer in what happens in life, the mortality rate has approached 100% now and for eternity, and it looks like it'll continue that way. We are in a state of entropy. No matter what it looks like we're wasting away, we're decaying, and we don't have that long. And so the question is, I read this quote the other day. It was like, people chase money with time when they're young, and then chase youth with money when they're old, right? And it's like, I think that's true. There's something about that. I'm starting to feel that. I'm 41, almost 42, and there's a lot of ways to make money. In the traditional value investing world, there's this idea of a cigar butt, right? So it's this thing that you can find that's got a little, few puffs on it that you can buy for almost nothing. And look, you can make money buying cigar butts. The analogy is actually really good though, because you think about it is next time you walk by an ashtray and you got a slimy, nasty cigar butt that somebody's chewed on, could you grab that thing, spark it up, and get a few puffs out of it? Absolutely. Is that how you want to spend your life?
No, thank you.
Probably not. And by the way, that's a great analogy for what a lot of people do when they buy a small business. I mean, if you're buying a business that's under $5 million of free cash flow, and I'm using that as a approximate kind of view of size and heft. I mean, I've seen horrible businesses that are $10-12 million of free cash flow, and I've seen wonderful businesses that are $1 million of free cash flow. So I'm just saying approximately $5 million is kind of a line of demarcation around some level of sophistication and professionalization. If you're buying under that, I mean, you are inheriting decades of chaos and difficulty and debt that goes far beyond financial debt, right? There is lots of cultural debt. There's lots of customer debt. It is baling wire and duct tape that these businesses are held together by. I mean, one of my quotes probably the only quote I'll go down and remembered for is that all businesses are loosely functioning disasters and some happen to make money. Right? If you've ever been inside a business, and I don't care if it's a Fortune 500 company or it's a small business, it is chaos. And so why do people want to sell out of that? Because they're exhausted, because it's stressful, because they can't scale the business because they've reached the limits of their talent or the limits of their personality. I mean, if you look at the selection bias of who builds a business, you kind of got to be a little crazy and a lot arrogant to start a business. And I say this as somebody who started businesses. Right, the people who are starting companies, who are taking that risk, who are using the cult of personality to attract people to come together around nothing to try to build something, they're usually kind of nuts. And so when you look at those people, that's also what limits them. It gets them from 0 to 1, but to go from 1 to 10 requires a different type of personality. And so many of the business owners find themselves, hey, I've been kind of at the same level for a decade now, and it's hard, and I haven't taken a vacation in a long time, and my family hasn't seen me a lot, and I don't have a great relationship with my wife or my children or husband or whatever it might be. These are very real, normal situations. And so why sell? Because you value your time more than the money, more than the delta in that, because you want to spend your time doing other things, because you need to spend your time doing other things, because you need to take care of a sick relative, or you need to take care of your own health, or you are preparing for your legacy, and you want to make sure that the people who you've invested so much in and the community that you've invested in so much in is well stewarded in the future. And it's not just, haphazardly transferred, which is inevitable to create massive problems. So there's a lot of non-economic reasons, but I always tell people, whenever I talk to somebody who reaches out and says, hey, we're thinking about selling our business, we'd love to talk to you, I always try to talk them out of it. Like I literally will spend time on the phone with them telling them, are you sure? Because if you love what you do and you want, and money's the most important thing, the dumbest thing you could do is sell your business.
Wow, it's all also true. I have been in the investment profession 2 decades. I'm 2 years older than you, and I spent half of this time as an employee of an investment firm, and the other half as a co-founder and now founder of an investment firm. And I can tell the difference between being an employee and actually running a business. A lot of people say I want to manage other people's money. There's a business behind it that you have to run, and there are a lot of considerations that you haven't even thought about that go beyond just picking a portfolio of stocks and talking to clients, actually running a business and making it work as much as you're running everything else. So I can relate to that, and I can see how some businesses are really, as you said, disasters, and there's a lot of duct tape going on. So you have to have processes in place, systems in place, and really think it through. so that it works in case you want to step away. I want to bring up something that really struck a chord with me when I was reading your book. It reminded me that all business is about people. And you have this quote that I really like. You said, all the stakeholders in a transaction are human, and all humans are messy, emotional creatures. It's a great reminder because we think we're buying this entity, but no, we're getting everything with it. And there are a lot of moving parts, and those moving elements, participants are people. How do we navigate it? What do we need to know? Because it looks like you have to be a human behavior expert as much as a business owner and operator at the same time.
Well, I think you just nailed it. I mean, the math is super easy in small businesses, especially if you don't use debt, right? It's very easy to model out. If you buy a business for a 5 times multiple on free cash flow, it's growing 5% per year, full cycle. You know what your returns are going to look like. And the question is, can you move that up, or is that going to start to decay? And the reason why it would increase, or the reason why it would stay the same, or the reason why it would decrease is it's all people related. So all of your problems are going to be people related, and all of your opportunities are people related, which means that the hard part is the people, and everything is people. And so I would say 1% of my job is financial, and 99% of my job is human. And we always try to remember that. The spreadsheets that we see and the financials that we review just help us tell a story about the people. What have the people done? What does the culture look like? And we think a lot about quality of earnings, not just quantity of earnings. So eventually, quality of earnings turns into quantity of earnings. But in the short term, it's really hard to distinguish between the two. And, I think anybody who's operated a business knows the difference between kind of hanging on by your fingernails and somehow the Hail Mary works and you make the sale at the end of the year versus, slow, steady, incremental growth that you really feel is building. And there's maybe a potential energy that's building in there that then ends up getting released, right? So I think about our aerospace business. We bought that in 2019. And I don't know if you know this, but the aerospace business never goes down. It's always at least flat or up. We were called complete morons, which by the way, we probably are in other areas, but for this reason, we're not, which is we didn't put debt on it. And so we go into 2020, the industry's down 70, 80%. We're the only ones that can buy parts packages. We're the only ones that can hire. We make about 10 years of progress in 2 years. Now the financials, if you look in 2020 and 2021, looked horrible. Like the financials looked terrible. And by the way, we were intentionally we were spending down all of the free cash flow of that business to try to make this 10-year progress, because we saw a window where we could hire the best people. We could buy parts packages no one else could buy at incredible rates of return. And what did we do? We chose to intentionally make the quantity of earnings come down to dramatically increase the quality of the business that then would, out the other side, hopefully would rocket out of it. And that's exactly what's happened. The business is 5 times the size now that it was pre-COVID. And it's not because the industry's recovered by 5 times. In fact, the industry's up marginally since pre-COVID, but we're up 5 times, and we're really gaining momentum. And it's incredible to see the effect of compounding, because we were no debt, and because we were patient, and because we had a long time horizon, and because we said, okay, let's do the thing that we've always said, which is if we can have the flexibility when everyone else is having to go in one direction, we can go in the other and make good long-term decisions. It's impossible to make good long-term decisions with short-term capital. There's just no way to do it. And so that's a great example of what we're talking about. But it's all people related. I mean, we're trying to invest in people, find the best people, encourage the best people. And I mean, this goes again to the ethos we have, which is we want people to live flourishing, healthy, successful personal lives. Like, we're not looking for business robots to come on and just crank as much as they can. We're looking for people to have well-rounded, healthy, flourishing lives. That includes personal. We want, if somebody gets acquired by us, we want eventually, it's not an immediate thing, we want eventually that their marriage is helped by us. Their relationship is helped by us. Now, practically, what does that look like? It's not like we're saying, oh, you need to, welcome new CEO and executive team. We'd love for you to attend this marriage seminar. We're not doing that. What we are trying to do is we're trying to treat people incredibly well. We're trying to be thoughtful and kind towards them. And hopefully that ripples down into their life and how they treat their employees. And we're trying to create a culture that actually cares. Like, people can tell if you're treating people as quote unquote human resources, right? Which is the most sanitized, disinfected term, right? Like people are humans, not human resources. They are the end, not the means. If you treat people as the means to your end, they're going to feel like a tool. They're going to feel like a hammer or a wrench, right? Doesn't feel good. It's dehumanizing. And I think that's what, if you look at a lot of what's wrong with business, and I could go on, you're getting me like ranty now, but if you look at what's wrong with most businesses is they don't treat people as people.
True.
And people can tell. And so what we actually try to do now, imperfectly, we say sorry all the time. We screw up like everyone else. Like we are not perfect. We are very messy. And I say that in the book. Like I'm the chief amongst messy people. But we have an empathy and a true care for people. Like we want people to be successful, independent of the business, independent of the financial success, because also it adds to that too. Like if you can create a system where everyone wins, that's the only thing that's sustainable. Anybody who's part of a system that's not sustainable will stop. So if any one of the stakeholders is in a position where it's not long-term sustainable, you're screwed and you just don't know it yet, which is what I feel like a lot of people miss.
You touched on so many fascinating topics. So let me quickly recap. I think it's very important what you mentioned about people. These days, businesses are not really about the warehouses, the real estate, the machinery that was the case maybe 100, 150 years ago. It's the people. They bring the talent, they bring the commitment, they bring the passion. And they're the ones that will stay the extra hour to do something or not, or leave 5 minutes before the time is up. So the way you treat them is so important. I do have a feeling, just anecdotally observation about businesses these days, that people are not treated the best, and it does spiral down all the way to earnings and all the other results that you feel like you have this amazing resource, for lack of a better word, but that you're not tapping into, you're not allowing them to flourish. So I think there's a lot we can learn, and maybe what you're doing is giving an example to other people how to do it. You mentioned something really important, that's the capital and the investment style has to be in sync. If one has a long-term view, then the other can have long-term view. And it's very, very important, even from my perspective, managing money. If my clients can take a long-term view, I can invest the money with a long-term view. I think there's a lot of dissonance in the broadly defined investment profession, where you think you have long-term capital, you want to commit it for the long term, but your clients are thinking in terms of quarters and worse in terms of months. So I think that's something really important. I want to ask you about real disasters, something that you thought you know everything, it was going to work out, and it was not what you expected. Have you had one of those?
Yeah, I mean, we've had a lot of disasters. I don't think there's ever been a deal that we've done where at some point in the ownership cycle, I've not gotten on my knees in the middle of the night and prayed for rescue. Yeah. Right? I mean, these businesses are tough, and look, we've had major business failures. We've had unfortunately the untimely death of leaders of our businesses. It's been, that's probably been the hardest thing for me personally. Is just the scale of the business at this point with how big we are. Everyone's always, it seems like there's always somebody getting sick, or somebody's children who's getting sick, or some major life crisis, people's lives are tough. I don't know anybody, no matter how wealthy or healthy or whatever they are, who thinks their life's easy, and then you multiply that by over 1,000 people. And there's some really unfortunate situations that pop up. How we handle those, I think, is what I'm proud of. We try to think about what is in the best interest of the other, not what's in the best interest of the business in the short term. And so we really try to be flexible with people and caring, and try to surround them with support, and truly create an atmosphere that they know that they're supported and cared for. Do we do it perfectly? No, of course not. And some things slip through the cracks, but we try. And I think that meeting problems and making sure we don't put our heads in the sand and run towards the fire and help put it out is something that we've gotten good at. So, people are going to get sick and die. People are going to get injured, and people are going to have really messy personal situations that come up that, divorce, addiction. We've dealt with it all. Really difficult children situations. So when somebody raises their hand and says, "Hey, I'm hurting," The answer is not to tell them, well, suck it up and you better deliver, next quarter's results. The thing that you should do is to say, hey, help me understand what you're going through. Can we help you personally? Put all the business stuff aside. Can we help get you healthy? Can we help get you into a situation that's better for you? And how can we help make sure that the work that you're doing is either put on pause or uninterrupted in a way that would be good for you? That when you come out the other side of this thing, whatever it might be, that you can regain, pick things back up where you left them. And we've had success in doing that. We've also had a lot of failure. And I think that the unfortunate part is when there's major disruptions. Again, human nature. I'm not judging these people, but there's a lot of people too who use that for their advantage. And so we've had, unfortunately, situations where somebody gets sick and dies, and people use that as a way to play for power and to try to take advantage of it to gain for themselves. And so, we want to be wise in how we deal with people. We don't want to get cynical, but it's also difficult because you see a lot of stuff over time that's you just never would have guessed at that time how people would react. And so just assuming that things are going to go poorly and assuming that people are going to make bad choices and also trying to give grace to them. We've had situations where people have acted poorly and we've said, hey, doesn't feel good the way you treated us. And some people say, screw you, I can do what I want. And those are probably the people that we don't want to be associated with. And other people have said, I really feel a lot of guilt and shame around how I acted, and that's not who I am, and it was a moment of weakness. And we say, okay, great, like let's work on it and let's regain trust and rebuild. So we try to give grace too, which is important.
It's fascinating that it comes down to people again, right? And these are human issues, human problems that come up as you're running the business, and you have to face it as they come. There's a question that you ask in your book. And I just love that question, so I want to bring it up. And you ask that question: if you could wave a magic wand, what would or should happen? I'm just curious, what do you usually hear when you ask that question? Are there some patterns, something?
It's wild. Yeah. No, I mean, when you really ask it depends on how guarded people are. Most of the time, to be fair, people are going to be pretty guarded in their answers. They're going to say, oh, well, my fantasy is to do whatever is best for you all. And it's like, okay, great. Thank you. Can I ask the question again? And now you answer it seriously. And you'll get people who say, honestly, like I want to be an artist, or honestly, like I want to move to Europe, or honestly, I want to work in the business for the next 10 years. I just don't want to take the risk that I've been taking. What we say to somebody is, look, we can work with almost anything. So don't assume you know what we want. Truly tell us what you think is in your best interest and what you really want. And also some people don't know what they want. So we have to work through a process with them of helping them understand even what they want. Because I think the most difficult thing for us is to give somebody exactly what they asked for and for that not to be what they want. So what we tell people is just communicate. If something changes, communicate. But we always try to have a plan going into a transaction and say, okay, look, if you tell us I want to take steps back in the first 6 weeks, like that's it, and then I'm out, great. We can plan for that. We just need to plan differently than if you say, I'd like to be in the business for 3 to 5 years, or I'd like to be in the business for 10 years, or honestly, I don't have any plans to leave. Those are all very different scenarios and situations. And so how we prepare and the resources we surround that person with are going to be different in those different situations. So the more that somebody can just honestly answer that question, and even honestly answer, I don't know, is very helpful.
Yeah, it's fascinating because for a moment you ask people, what if anything was possible? What would you like to happen? If they're honest about it, it gives you a better idea of what they think would make them happy. But you're right that you have to ask the question multiple times to get to the bottom of it. We started with the idea that you care about what happens next. So I'm curious from the buyer and seller perspective, and mostly the buyer at this point, what happens next to the business? And I would like to tie it back to the idea that, you're a unique buyer. So I'm curious, how do you see the advantage for the seller to come to you? And then what happens next? And how can the seller feel like, oh, this was the right home for my business?
Yeah, well, maybe actually we start with the seller, because I think it's important to know, and this is without judgment, but most people, what they care about most is the most cash at close, right? Mm-hmm. And I would venture to say 90 to 95% of people they try to dress it up because it feels crappy to just say, look, the reality is I'm going to sell this to the highest bidder. I don't really care who buys the business. I could care less what happens next. Doesn't matter to me. But that's the reality, I would say, for most people. And that's a non-cynical answer. That's like backed up by the data that we have and anecdotal and otherwise. So you got to start there and say that if somebody is going to actually care what happens next, they're already in a very, very, very small minority of people who actually care what happens next. We want to attract those people because those are the people who have built businesses differently. Like if you think about the mindset of somebody who only cares about themselves, who only cares about maximizing the value and really the short-term cash value at close, that's what they care about the most. They're going to probably have hired people who are mercenaries, not missionaries. They're going to probably have set up a compensation structure to encourage high competition and sort of a survival of the fittest mentality internally, which again has certain advantages and disadvantages. You just got to know what you're buying. But a lot of the ways in which they're setting things up are probably going to be areas that are more short-term, less people-centric, probably weaker culture, and a lot more disruption and chaos and conflict than somebody who says, hey, I love my community. I love my people. I've made a lot of money already. Yes, I want to get paid fairly. Of course, right? Like we wouldn't buy a business if no one would sell us their business if we weren't paying a fair price. But I'm not trying to see exactly how much I can extract from whoever it doesn't matter who, from whoever, it's how much money can I extract. The people who really care are going to set up their business in a way that is going to be much more in alignment with our values, and we'd be much more excited to partner with them over a long period of time. And so I think that we take care of a lot of problems by the selection bias that we create. I mean, the same thing for our investors, right? Like we have a lot of people who say we're complete idiots and they would never give us their money for 30 years. Fantastic. It saves us so much time because we don't have to interact with a group of people that on average are going to be lower quality than the people who are, yes, of course, you can't compound unless you have a long time horizon. Yes, of course, we want to partner with somebody and develop trust with them over a long period of time. Like those are just fundamentally different types of people. And so what we want to do is we want to create a system. And really the three people we're mixing together are sellers/opportunities with investors with talent. I mean, those are the three big buckets. Like we are basically a matching machine for those three things and adding a layer of structure and oversight and care on top of that. For each one of those buckets, we want to create incredible selection biases, and this is obviously one of them. So yeah, we want to find people who care what happens next. We want to encourage them and be on the same side of the table as them. We want to get money and all the conflicting things out of the way. And there's a lot. I mean, there's roughly 400 things you have to decide on together as a buyer and a seller in a transaction. It's hard, especially you get lawyers involved who have very different incentives. You get investment bankers with different incentives involved. Emotions can run high. You're sleep deprived. You're stressed out. It's hard. It's really, really, really hard. And so we try to have a lot of empathy and compassion for people and just really try to develop meaningful, genuine relationships. I mean, one of the things I always say, first dinner I have with somebody who we're going to start going down the path and in earnest with them, I say, hey, look, there's going to be at least 3 or 4 times in this process where you're like, F them. I hate those people. I don't want anything to do with them. I said, when you feel that coming on, pause, stop yourself. I almost guarantee you that there's been a miscommunication. So all you have to do, here's my cell phone number, pick up the phone, tell me how you feel. You can cuss at me if you want. I'll take it. I'll then go figure it out, right? And I'll come back to you. And almost inevitably, in fact, inevitably, it's going to happen every single time there's a transaction. And by the way, post-close, like there's no way to be in relationship, in any form of meaningful relationship and not have conflict. So If that's your expectation of the world, you're going to be constantly disappointed and surprised. So we just try to meet it head on. Again, work with people who care what happens next, investors, employees, sellers. It's all going to create a much more flourishing system, or at least set up the right ingredients for flourishing long-term.
No, I love the sound of that. And we're back to people again. I want to ask you about the day after. So we go through this whole journey, the business gets sold, and you write about it in your book. And I found it really intriguing because I think it's not talked about. It feels like, oh, it's the celebration. You pop the champagne and everything is great. But you say in your book, it will not feel normal. It may not even feel like you expected. And you talk about even the seller's remorse, like, regret that you sold the business. Can you talk about that experience after the sale? Because I'm sure you've seen it more than once.
Yeah. I would say the best situation after the sale is a high level of mutual respect and a rooting for each other. That's what I would say is ideal. And we've had that with sellers, and it's the most beautiful thing. It is a gentle kindness to say, hey, look, I know you guys are going to not do everything the way I would do it, and that's okay. And I understand it needs to be your thing now. You're the majority owners. Ultimately, you've got a lot more skin in the game now than I do. And I'm for you. I'll try to speak truthfully to you, but I won't get upset if you choose not to take my advice. And vice versa. We say to the seller, look, you're in a way superior position of knowledge to us. You're the expert, not us. We have a high level of respect for you. We care about you. We want to humbly submit ourselves to you. So there's a humble mutual submission that I think works best post-close. I would say that's not the norm, though. The norm post-close is egos flare and disagreements will flare. And look, it's hard when you've been doing something for the same way for 30 years and you have somebody come in, and we try to be, from our perspective, from Permanent Equity's perspective, our first rule is do no harm, right? So that's the first thing we think about a lot is we want to make sure before we start pulling on strings. I think about it as like a ball of yarn that's got some strings coming off of it. You start pulling on a string and all of a sudden half the ball of yarn falls off the other side, right? You don't really understand what it's tied to. So we really want to make sure we understand what are all the strings and loose ends tied to before we start pulling on them. And we want to make sure we do it in the right sequence and the right way and with high care. The situation, though, post-close can get dicey when, I say that's sort of damned if you do and damned if you don't for a seller. If you do better and the seller's in the wrong mindset, if you do better than the seller, then they have seller's remorse and they're like, well, screw those guys. I worked on this business for 30 years and now they're reaping the rewards. Again, not true. You got paid. You did a transaction, but it can feel that way. And then vice versa. If look, things are difficult post-close, we don't have a perfect track record of things going up into the right post-close. You take somebody's baby and you screw it up, even if you didn't actually screw it up. And even if they would have screwed up under the same scenario, they look at you and say, well, you just hurt my baby, And so it's this really odd damned if you do, damned if you don't that I think you can easily slip into. And so how do you solve for this? You try to be kind and generous and graceful. You try to talk about these issues post-close. The first hint you get of any conflict or friction, you try to bring it to the surface. I feel like that, resentment grows in darkness. Like so much of the worst parts of human nature grow in sort of keeping them pushed down and internalized. And so what we encourage people to do is just to check in and say, hey, how are you doing? How are you feeling? What's, is there anything we could be doing better? Is there anything that you think that we're not doing well? Is there anything that you've heard from the employees? Anything? And sometimes, people will get guarded about it, but oftentimes they'll tell you the truth. And it's beautiful. And that's what we want.
I love the sound of it. And I have 1,000 follow-up questions, but I'll save it for another time. I have one last big question for the day. I want to ask you about your definition of success. How do you think about it and take it in whichever direction you want?
Yeah, I mean, this has been an evolution for me. Like I said, when I was growing up and certainly into my teens and 20s and probably even my early 30s, I thought that the way I had to be accepted and to matter was to perform. And so if your identity is tied to your performance, anytime somebody questions your performance or that your performance is not ideal, it's going to throw your identity up into question. And look, it's a brutal way to live. I think that a lot of people live with tremendous anxiety. I mean, I've lived with tremendous anxiety. My orientation is towards the future. And so when you can imagine a lot of futures, you can imagine a lot of tragedies too. And it has advantages, right? I can be creative. I mean, creativity is imagining a different future, right? And innovation is building towards that future. There's a lot of, positive things, I can also very quickly run down rabbit holes and imagine all kinds of things that are going wrong and a lot of catastrophizing in my future. So, for me, a big shift in my life was I was a hardcore atheist. I became a follower of Jesus very unexpectedly. Like, I can't even tell you how unexpectedly it was. And it's really transformed how I think about the world. So now, what is success? It's to be an ambassador of the kingdom of God, to try to bring healing, bring flourishing wherever I go. I'd certainly do it imperfectly, certainly have to say sorry a lot. But it has reorientated me from being called to work hard and give up the outcomes to a higher power. And that really, for me, has been a freeing thing. And I think the outcomes have turned out way better as a result of it. But yeah, my focus now is on just trying to treat people as made in the image of God and trying to bring healing and flourishing wherever I go. Again, imperfectly.
No, it's beautifully put. And I like that you relaxed from the outputs that we're so obsessed with, like the goals, and then more focus on the inputs. How do you get there? And do you enjoy the journey as you go? Brent, this was fantastic. Thank you so much. And we just scratched the surface here of so many wonderful things. So I highly recommend the book, all the links in the notes of the episode. But I really enjoyed it. I'm very grateful for this hour with you. So thank you so much.
I'm grateful for it too. Thank you, sir.
You were listening to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest subject of all, money. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. If you enjoyed the show, please take a moment and follow, subscribe, rate, and share with friends and family. We rely on word of mouth to promote the show. One click for you means the world to us. Thank you. Until next time, your host, Bogumil Baranowski.